Yo, Mario, bless that beat, bless that beat. GTB Productions. Yo, Mario, bless that beat, bless that beat.
Good evening. Welcome to Evening Markets. I'm your coach, Tim, Mr. Born Again FX, and here to serve. Happy that you are all here. And I see you in the chat. Good evening, good evening, good evening. Say hey as you come on. We're going to start rolling here in a second. I'm trying to pull something up. Okay, I see it. Let me see. Yeah, we're going to get started here pretty soon. Good evening, Kamika. Good evening, Tisha. I see you on. Dr. Denise is on. Good evening. Mia. Hey, Kiari's on, Brian's on, Dr. Lakeisha's on. We got the crew on. Good to see everybody. Bear with me for 1 second. We're going to go ahead and get started. Just doing a systems check, making sure I'm logged in to everything. And so we can see what the evening's going to be. Oh, okay. Let me see. I got some. Let's check out this. Let's see what we got here. Okay. Testing out my Beats by Zeke. See what we got here. Corey is on. Jeremy's on. Yeah. Oh, I like this one. Yeah, I like that. Okay. All right, I'm just doing a systems check. How everybody doing this evening? We're gonna have a good time today. And okay, here it is. What are you all looking at in the evening? We've been doing these evening segments for a while. What are you all looking at right now? What do you see moving? Okay, got that. Let me see if I can upload that. And we got some time. I'm just uploading some things and making sure some things are in place for us tonight, and then we're going to have some discussions, some stuff I want to talk about, and we're going to have a good time. But let's just vibe out to the Beats by Z. Platinum and silver. Okay. We'll take a look. We will take a look. Let me share my screen here. All right, we know tomorrow what tomorrow is. Tomorrow's going to be crazy. CPI month to month. So markets did its thing, and then we're consolidating in a lot of these instruments. Just waiting on Waiting on CPI news tomorrow. That's the biggest news event. That's the biggest news event that we're going to have for a little bit. That was good. That brought some life. Vibing out. All right, yeah, that's the biggest news event that we're going to have for a while. So it's important to pay attention to it. But I don't expect major moves to happen. But let's look at it. Going through the nights, I'm not really looking at platinum and silver, but let's see how they're moving. Let's see how they are moving. All right, night segments or evening segments, markets are usually in the absence of news. Asia has woken up. They are trading. They're doing their thing. We're right before the London session. And that 8 o'clock candle opens up. We usually catch some good moves. That's really the start of another move. And we usually look at Nikkei, and we usually look at gold and NQ. NQ, very rarely I trade NQ during these night segments, usually Nikkei or gold. But let's take a look just to see what it's doing. And I'm not really seeing the move on platinum. I know we were looking at this earlier, so they're printing lower highs and lower lows, right? So this is the lower high, this is the lower low, lower high. So they just printed a lower low. So the next event for platinum is the lower high, right? So it'll retest this past support level on that. So I'm not going to spend too much time on platinum because the next support level is right there. It'll go up, hit that, or it may retest it right here. So that's what we were looking for this morning, is the breakout to the downside. All right, let's look at, you said silver. Silver looks like it's on life support right now, just standing still. Life support is, you got the heartbeats, they moving up and down, and then it stands still, goes flat, it's flat line. Not really moving, so I'm not really interested in that. But it is a retest of this past structure. It may move up, but there's no volume there right now. So evening markets, we're not going to trade out of the consolidation. But let's look at some of what we have been looking at before. And let's look at Nikkei. So the last time we were all together as a family, Nikkei was down here, and it was just pushing up. We were expecting this move. And we had it at the time to retest this trend line. And so that was the play. I entered in up there. Some of you entered in, and I heard reports that you carried it. So we pushed up. I said, if it comes to 78.6, what's the first level that it will reject off of? And it's 23.6. So it pushed up to 23.6, rejected. I took my profits right there, then came right back down to the support. And guess what? It hit take profit and some. That was a 1-1, almost a 1-4 trade there. All right. So that was a great move from the last evening markets that we had together. And look at where we're at today. We're on that trend line again. And so guess what? It's the same analysis as last time. Is that will this trend line hold from here? And will we? And we can adjust it just because we know more. We have a little bit more information. And so we can adjust it a little more, make the trend a little flat. And but we're on the same spot. We hit take profit 1. And then so this fib is no longer here. All right, so that fib's gone. And we got a new level that we have to evaluate. All right, so let's mark out this where we're currently at. We're currently on this trend right here. All right, let's get rid of this last move just so we know where we are in structure. Let's bring it over here, and we kind of know where we're at in time. So let's just bring it over here, and now we can start to climb down. All right, so right now it's going to look a lot like, I don't expect major moves in this evening segment, but it's going to look a lot like what we saw on the last evening segment, where we're retesting the last high. We broke out, retested. This area has acted as support. The only thing with this one is that in this up move that is here, we've come through and we've broken through this neck piece here, right? So that's giving us the sell signal at this moment. And then it comes down to support, and we're on this trend line, and we know that in this move, in this choppiness, we would have loved to been to the upside because it produced that. In this choppiness, we would have loved to be on the upside because it produced that. In this choppiness, upside. All right. So that's 1, 2, 3 times to be on the upside. Now you have this fourth time here, right? Where you're getting the same choppiness. And so we want to beware, type of thing. That's what type of time you want to be on is you want to be on the right side of history and choppiness to the upside. So that's kind of what we're doing. That 8 o'clock, that 7 o'clock candle really tells me how it's going to act. The 8 o'clock candle opens up and we just don't have any kind of volume. When I turn on these volumes right now on the hour and see how much is coming to the market, it's not there, right? And so that's the reason why we got a little bit of time to talk through this, see what is what, and what everything is doing. Okay, yeah. All right, Tara's blessed me with another big track. I might have to use all of these. Let me check this out. Let me see tell me what you think of this one. We're experimenting with the music. What kind of vibes are we going to get this evening?
It helps
All right.
to find purpose in life.
Oh, I like that.
I do believe you're destined for great things.
Okay. Okay. All right, we're going to vibe out to this one. Like this one too. Yeah. All right, so we're going to sit right here. We're going to see if we get any wick action. We're going to let this come down and see if right, so Keisha for the block. I might have to change that one. Yeah, we don't want Keisha for the block to come out. Yeah. All right, so let's start going down through the time frames, see if we like this move. Then I'll jump over to gold as well. But coming up to CPI, you can see that we're not getting any kind of movement on this piece here, and so we're just going to be a little patient and wait for some volume to come in. There we go. Yeah, my let's see where my timer's at. There's the timer. Okay, I was waiting for the timer to come on. All right, so we're not getting any kind of volume on that one. Yeah, this is a good a vibe. We got some tracks. Might have to bring some of these to the morning segments. Okay, so nothing's going on with Nikkei right now. We're in this range. This is a 3-minute. We're touching down on liquidity. We have the trend line. We're looking for buys. So right now, without the volume, you get an opportunity to analyze it. That's why I love it. In the morning, you get a few seconds to analyze it. In the evening, when you come right before bed, you're going to look at this. You're going to have a opportunity to analyze it. Sometimes it's going to move really, really quickly. You may get a couple minutes that volume is just going to start picking up. But other times you're going to have nights like this where you're going to look at it and you can look at the structure and evaluate the structure for what it is. For this one, I really like it myself to allow time to stand still. That markets are really interested in what tomorrow's going to bring. But this is the fourth touch of this trend line where we had great things happen. And if I can get a full, not 24 hours, but we'll get like 20 hours of movement. And which direction do you want to be in? Right now, it's liquidity on this level. We can at least allow it to come down and start to get the push up on that. And these can be great moves to throughout the night. right? And without even risking too much, you can see that we're at the bottom. We're not risking too much. I'm going to evaluate what that looks like because these are full contract sizes. So I'm going to evaluate what that looks like for this account. You know, so you're risking $375 to make 1,000 on this, and the target for something like this with 20 hours of letting this run. And I'm going to go why we're looking at this in a second, but just let's look at targets. Just naked charts, looking at targets. We have the trend line here. This structure isn't broken. So the next target is going to be to the upside, right? It's going to be up here to hit this this trend line. That's what this trend line has been producing. That's what it should produce again. That's a 1 to 5. All right, for the next 20 hours, if you let that run, it's $300 worth of risk to make, you know, potentially 25,000 or 25,000 with 13 contracts. I'm not going to do that, but $2,000 with one contract is $375 worth, enough to make $1,975, and that is important to me. You know, that's important to me just because risk reward matters in my trading strategy, right? And so nothing right now is telling me that we've broken structure, that we're going to fall out from this point. You actually have a lot of structure looking left, where this has been rejection. We climbed on top. Now it's acting as support. And so, you know, as we start to go through, we got 1, 2, 3. You could call it 3, 4, 5 because those are. I'm on the hour chart, so those are different hours. Let's go to the 4 hour just so we don't have to. So we got 1, 2. Let's just do it like that. 3. We got 4, and we know this is multiple days right here that we set there. So we had multiple tests. All right, so we have multiple tests where the trend line has produced these highs, and it's really just 3 that produced these touches. 1, 2, 3. So let's do that. 1, 2, 3. This will be the 4th touch, right? So 1, 2, 3, and then the home run possibly, right? In the grand scheme of things, if you look at this, where we're at, this 4th touch could produce the home run. And we've seen that before in the past. Just looking at this, 1, 2, 3, 4, produce the high. All right, we've seen it over here. 1, 2, 3, 4, and then a high. Let me zoom in. I don't think those examples you've seen any of them. Yeah, so we've seen it right here. 1, 2, 3, 4, and then the high. All right. So, all right. So we like that move. What you think about this move? In the chat, it's a longer run move. It's let's look at the higher time frames. I haven't turned on any indicators to look at this level. We have time to look at it. We got exhaustion on here. So I haven't really, I really like it. So I haven't really looked at the higher time frame, but let's just look at that because we know that this may have the potential to run for 20 hours. So we want to make sure the higher time frames is in our favor. All right. So looking at, let's start on the week. Week is working with us, right? So it's not leaning one way or another, but we're coming up out of the bottom. 3-day is working with us. We're coming out of the bottom. We're starting to see, you know, some shark fins from peak to peak, where we'll produce from here. So we're starting to come out of that. Day, we're kind of ranging right there on the day. So not a huge piece one way or another. And let's see, 12 hour. Moving slow here. It'll come. Come on. Let me refresh it. There we go. All right, 12 hour. 12 hour looks like it's starting to like we have some room to come down, but let's go to 8 hour. Yeah, 8 hours going to see that divergence. So we may have a 50. Yeah, we have a 50. That's a little lower. Whenever I start to see diverge, I start looking for the 50. Right. So to the upside, that could act as support. But we're just now on that 200. We may see that 200 reject. We got 4 hours for that candle close. The 4 hours right there, and that 4 hours right there with the 4 hour 50 coming up, and that's the divergence from the last touch of the trend line. Divergence. Okay, so we're starting to think buys at this point. Now you have the hour divergence, our shark fin with the divergence. We came lower. All right, so then we have the signal now to buy this. Right, so we're going to buy this. It's just a matter of giving ourselves room to buy it. All right, so I went through that analogy, that methodology. Everyone should be seeing how we're evaluating these fast markets, what we're looking at here. We're below the VWAP. That's something that the session anchor VWAP, that's something that you have to pay attention to, but it's flat. So we're going to be in consolidation. We're aware of that. We are aware that we're going to be in consolidation where we just want to catch top of range, bottom of range, and price may go up and down before making the move. Something that we were in last week. And so you got to be okay with that. All right. Just trust your analysis. You're going to be right. Your risk reward matters here. All right. So we're going to stick with that analysis. Everyone should be seeing that analysis. Everybody should see why this trade box makes sense and why we're taking this trade. So now we're just going to look for entry. We're going to go to the lower time frames, and we're seeing the TDI get low and start creating divergence. That's something that we love to see. We love to see this divergence be created. But we turn on those MAs. That's potentially where we know that price could go. And so, Dr. Lakeisha, I haven't set a stop loss on this yet. I have an initial trade box, but we're going to adjust this. All right, as I go down through the time frame. So this 5-minute divergence that's here, really, we're getting a really cheap price right now. So we may have a sniper entry into this as that TDI is showing us where the volume, speed, momentum is going. It's showing that there's getting ready to be a turnaround. This is really where you want to take the trade right here. All right, so 3 minutes or a 5-minute gave us that. 3-minute is in confluence. It's saying that we're not divergent now on the 3-minute, but we're starting to come down low. At least we're not at the high. We're starting to come down low. And then 1 minute, we're touching the band, right? So this is the area to buy it at. We're going to get a really cheap price at this level right here, and we don't have to pull down much further than this. And then we're going to take it up to the high. So really cheap price to buy Nikkei right now. All right. Okay. So now my stop loss is at 38,750. I don't know if I need that much of a stop loss, but it's at 38,750. And knowing that if it gets past 38.8 as a psychological number, that's probably a good sign. 38.8, a flat, even psychological number would be a great entry. But I'm gonna go ahead and take my first contract here, and I may go in a little heavier. All right, so here we go. Let me enlarge this so everybody can see what we're doing. Did the evaluation. We're gonna hold it right here, and this is just something that we're just gonna let run through the night. You don't have to worry about it. You know, the risk reward is a 1 to 6 almost on this, and we're gonna leave this through CPI. Now, the last time we were on last Thursday, I left that trade running through NFP Friday. I didn't touch that trade and just let it run just because I trusted the evaluation. So NFP Friday wicked down and just was hitting that support, right? And so the same thing here is that CPI, we're just going to let this trade run, and we're not going to leave it at all. Now, let's do this since we have time. If this trade doesn't work out, why wouldn't it work out? Right. So I love to do that kind of analysis as well, because you have the time to do it. And a lot of times we do it after we get stopped out, we do the analysis. But sometimes it's good, all the time, really, it's good to do it before the analysis. All right. Good evening, Paula. Good to see you here. All right, we're looking at the sneak eye trade. So why, if this trade doesn't work out, why wouldn't it? Okay. So we're looking at potentially what's working against this is that structure was here that is being broken now. All right. So we're coming down, and whenever price starts printing lower prices is where you have to start paying attention to possible momentum to the downside. All right. So that's what we have here, is that we have structure that price is pushing through. Right. And so that's our first sign that this support level is now becoming resistance, or could potentially become resistance, right, as we break through that level. So that's the first thing that we're looking at. When we turned on those MAs before, we had a lot of confluence lower. So this volume piece that we broke out of, which we've already retested, but that was a liquidity level that's sitting a lot lower. This is a liquidity sitting a lot lower that we broke out of before. All right, so that we're very close to coming back to retest that level. That can stop everybody out. We can get momentum to the downside. That's where those MAs are sitting. That 4 hour is sitting right up above that liquidity level. So that is important. And then you get these on these higher time frames, you get these upside wicks, which says that the sellers are exhausted. That's what tells you the sell-off is happening. All right. And so all of those things lead to that we could be coming down lower when you look at that. And that would be working against the trade. And so you want to be on the right side of history. You want to be on the side that says that everything is working for your good, everything is in your favor. You just want to be on the right side. It's like when hard times come, you start to question if you're on the right side of God or not. All right, same thing in the market. You want to question if you're on the right side of all the volume and all the momentum that's moving, volumes to the downside and starting to break these levels, which makes us kind of cautious about getting into that. All right, so we want to see the way to test that is you want to see validation on the lower time frames that there is going to be some exhaustion, right? And so that's something to wait on. Well, you jump down, start going through those tests. Is anything holding down here? All right. Is there any push to the upside? Is there any fight? There has to be a sign of a fight. There's a fight that this level is going to hold, right? And so that's what you have to look for on these levels. But I like the area that we're in. It may dip down. I understand that 38.8 is a psychological number. And so, as we get down to 38.8, it may spike that a little more. Why not? We're only 15 ticks away from it. Let's spike it a few more times to see if 38.8 is going to hold as support, but definitely have my stop loss at 38.750. All right. Now let's take a look at entering this trade here. Right. So at one, it's a very cheap price, $375 to make $2,050. All right. And we can add a bunch of indicators on and check volume levels and all that stuff and different things. And we know that, once it gets up to here, that we want to move our stop loss to break even. It would be nice to have 38.8 as your break even point. And so that would be nice as well. But and here's this thing. Traders have to trade. if you're always on the sideline and not doing your evaluation, I did this evaluation. You saw what happened last Thursday. Last Thursday went in our favor. Last Thursday could have not went in our favor, and that's fine. You know, sometimes you're going to win, sometimes you're going to lose. But if you are not entering into these trades, then you could potentially be dealing with fear and intimidation. That is rooted from some belief system. That's rooted from somewhere that you have to deal with the reason why you're not taking sound trades. You know, I've talked through this for the last 20 minutes. Talk through the analysis of why I like this trade, and then if I walk away and say I'm not going to take it, well, you gotta really think about the reasoning behind that. If you're saying that, hey, I'm evaluating this looks really good, you know, what looks better, and especially at catching a bottom of a trend where it goes flat, it has momentum to the downside, then it goes flat. Well, you know that the chances of it going to the upside are high. I'm actually going to get in on this trade with a little more risk. I'm going to go 2 contracts right here. And I'm going to hit the buy button. And bracket order rejected due to main order rejection. Sell to, let me see what's going on. Bracket order. Not sure what a bracket order is. Let me try to do it on my Ninja Trader. Can I do it on Ninja Trader? Is there a Nikkei? I am getting an error, and let me see. Am I on this account? 45. You got plenty of. All right, let's try this again. Oh, let me enter it at market 2. So I'm risking $800 here. Buy. Whenever I start getting these errors, I go to Discord, go to ATF, see if there's any notices. And there was, so bear with me. I gotta see if there's any notices due to Rhythmic. Oh, interesting. Okay, so at 651 on in the Apex, if you're trading with Apex Funded Trader, they produced something in their Discord. It says we will share info about TraderBait shortly. No ticket needed. I am awaiting more information. As soon as I know more, I will share it here. So apparently TraderBait may be down. That's the broker I trade with through Apex. So I really want to be in this trade. And Apex was, I'm just reading the notice board and checking the main chat. Please understand that our moderates. Okay. Blah, blah, blah. Okay. Bear with me for 1 second. I'm just reading through here, seeing what errors are being produced. All right. All right. TraderBait may be down. Let's see. Let's try this one more time. Let's do 1 contract. Bye. All right. Let me try to enter an order on my Ninja Trader, which I haven't found Nikkei on Ninja Trader. I'm sure it's there. I just haven't looked. But let me try to enter the order in there on a different. Oh, it filled the order on. It filled the order on ES. It's not showing up here. I'm just testing out some stuff just to make sure. Okay, it's filling orders there. Let's go to Nikkei and let's fill an order. Oh, okay. The contract is expired. Okay. All right. So we got to grab the right chart for. We have to grab the right chart for. Um, oh, thanks, Harris. I should have looked at the chat. The supports in the chat. September contract. Okay. I'm looking on Discord. I should have looked at our advancers. All right, so let me grab the September contract. And plus, wish I could just copy over my chart in my trade box here, but that's fine. Pull that up. We'll get rid of this one after I get it, but let me enter into the order here. Trade box, and then we'll adjust everything. We already know 38,750 is my stop. Enter in at current market price. We're going to pull that up. So we know entry price is current. The stop loss is 38,750. All right, so that's really all I need. Hit create limit order. Market 2. Oh, it's gonna cost me $16.50 now. All right, we'll look at it. We'll look at it. Buy it. All right, so we're in on this trade now, and then I want to make sure that everything is according to my analysis. This one is the one that we're in, which 38,750 here. And 38,825. I just want to double check to make sure. Yeah, so there's more volume coming in. The contract's price is a little different, and the chart's looking a little different too. So let's do that evaluation. This is good that we get to do this here. I'm surprised that we're coming over to this chart this early. I thought we had a little bit more time. June's not expired yet. It's getting close, but we have some days left before the June contract expires. So I'm surprised that it wouldn't let me enter into the trade on the June contract. But that's futures. Whenever a contract expires and the next one opens, that's the futures market. And so let's just look at this from. Yeah, we're not going to get the data the same data that we have from the June contract, but let's just do our evaluation, which is coming up a lot lower, isn't it? As far as volume is concerned, coming up a lot lower on the September contract. All right, so let me do this. Let me evaluate it from this perspective, because I still like it on this one, but there's a lot lower entry when I look at the September. We still have the divergence, but where this is rejecting off of, it looks a lot different to me. Oh, I guess it's the same. All right, so we're going to leave this the same. Just the volume's not being printed on a lot of the history, but we're going to leave this the same. It just looks it looks like it should be a lot lower. It looks like entry should be here now at 38,785. Doesn't look like 38,8 is the midpoint. 38.8 is way down here at the 50. On this one, 38.8 is at current price. So that's what's looking different to me. Yeah, I'll speak about the monthly contracts. Let me just show you one thing here. I'm going to drop this horizontal line. I'm going to put that horizontal line right at 38.8. All right. So you can see that that's what price currently is rejecting off of on the June contract. It's 38.8 price is coming down and we're getting their rejection off of it. It's a psychological number, and that's where we want to be. Is that touch 38.8 kind of look like, you know, tweezer bottoms here. When you look at this, it's like 38.8. It came down first, hit right here, came down here, create those equal tweezer bottoms. We love when price does that. It gives us a really nice entry into the bottom. And so 38.8 right here, it dropped to just above it to 38.805. And so that looks good on the June contract. Now let's go over to the September contract. We're going to take the horizontal line. We're going to drop it on the chart. We're going to change that to 38.8. Same place. And re-look at it. And look how low it is compared to where price is. Price is way up here at 38.905. 38.8 is way down here. Right? And so we don't like, it's completely different than the June contract. Right? And the volume of the June contract. All right, so I'm going to explain some of this of what's happening with the monthly contract, but it completely changes the valuation because we don't have there's a price difference from those that are in the September contract versus the June contract. That price difference doesn't look the same, even though the chart's the same. From the evaluation standpoint, you still have some of this confluence that's still a target. You know, you still have some of that. Even if you put down your fib, you're still going to have confluence here. So, you know, we still have confidence in this trade that is going to take place. But now, you know, 78.6 looks like the place to be on this. It looks like, you know, this is what we were evaluating on the June contract. And so it looks like it should be 78.6 on the September contract versus the June contract, which is still the same. 78.6 is down here, but 38.8 is a little higher. All right, so I'm going to leave the evaluation the same. I still like it from a chart standpoint. I just don't like the numbers, the psychological numbers that we're standing on. Instead of 38.8, we're looking at 38.9 as the as holding as support. And now we're going to move up the stop loss in lieu of 38.750. We're going to move the stop loss up to 38.850. All right, so we're going to make the adjustment here. We want this at current price, but we're going to move the stop loss up to 38.850. All right, so not too big of a deal, but it's a big deal in terms of structure of what we are risking in terms of structure, because I still only want to risk the 650 that we had on the June contract. So now we're not risking. We're still going to risk the 650, but in terms of structure, that 38.8 looks like the better play on this. And I almost want to cancel this now that I'm going to the September contract, because I like 38.8. And you look at where we had structure, we don't have that structure here. Like this area of the retest that we were looking at, you probably see it better on the hour, is a lot lower on the September contract. I'm glad we get to go through this here. I'm glad we have some time to go through this, but this does not look as interesting now. At this level, we're still going to leave it in play, but we're starting to break through where it used to wick out before. We're starting to break through that zone here. That zone is actually right here. If you can see that, that zone is actually right here. On the September contract, on the June contract of that zone, we're still within structure. We're still tapping that 38.8 within structure. All right, and so it just looks like it's going to just looks a lot different to me. Like it's going to tap us out here. Don't like the buy. All right, so I'm going to for just looking at the September contract, I'm going to shed. I still think we have the buy opportunity. I think, but I still like 38.8 for that buy opportunity. So I'm going to shed half of the contract. I'm not going to go in with 2 and risk 650. I'm going to go in with 1 from here. And so I'm in a buy. I'm going to click the sell, right, which will cancel the contract. I'm going to make sure that the order is canceled here on the limit order. All right, so this is currently what the trade looks like. And this is what I liked on the June contract. I liked it being like this. All right, so that's what we're going to look at. But now that I'm looking at this, it's on the September contract, it's just not, I don't like it coming down that low. And I'm starting to see, you're getting this evaluation in real time here. Starting to see us breaking the neckline and potentially coming down even lower here. That's what I'm starting to see. Yeah, that's what I'm starting to see. All right, but it's a cheap price to learn that, to see if we're going to hold there. I'm risking 325. I'm going to leave the buy in. Not going to mess with it too much. I'm just going to let the buy work itself out. But if this level is broken, if we stay, we're pushing through it, which is fine. But if we stay below this level, but I'm surprised we're going to the September contract this early. We don't even have data or history, so we're right at the beginning of the September contract. So remember, futures is the hedgers are hedging against loss. So manufacturers and different things, they're buying commodities on a future basis. So they're producing it. They signed the contract. What's one example that we used before? Ford Motor Company bought, or let's use a utility, wheat. The farmer wants to sell the wheat, but he's going to harvest the wheat in August, or he's going to harvest the wheat. He's growing it right now. It's seed form. He puts it in the ground. He says, you can buy the wheat in September. But he doesn't know, the farmer doesn't know what he's going to be able to sell the contract for in September. So in order, prices may just fall and he could lose money on the sale in September. So to hedge against that loss, they buy a September contract, right, to sell it. So come September, the contract expires and the farmer has to deliver the wheat at the negotiated September contract price, right? And so now June is expiring. At the end of June, those that bought the contract back in April, the farmer now has to deliver the wheat in June because the June contract is expiring. Right, and so that's the futures market. You're buying price to hedge against future loss and future gain, right? And so we capitalize on the liquidation or the price movements that occurs during that time, which is fine. do that. If for the farmer it's a guaranteed price, or for the manufacturer it's a guaranteed price on both sides of that coin. It's a way to hedge against unexpected loss or gain in the production market. But we're going to hold this trade. We're going to ride it up. So that's what monthly contracts. That's the reason why there's monthly contracts, because it's a futures market. They're hedging against future price declines and profit. All right. So I like the evaluation I did on June contract. I'm going to leave it here for September contract. I'm going to leave the stop loss at 38,750. Let me get rid of this. And we're just going to hold this one because we are flat on the September contract. I just don't like, the way that it's looking. I want to pull this up because this is really what I wanted to talk about tonight. But we went into some other stuff, which is good. I'm glad we got to cover that and glad we got to do that. But I want to pull this up here. All right, as price. So who's all in on this trade? All right, so there was some confusion. I wanted to get it on the June contract, but we're going to settle for the September contract, and we're going to just let that ride through the night. I took off one contract, which and letting one contract ride, just because I could see price going a little lower, and if it breaks and cut, I have the the trend line a lot lower. All right, so on the September contract, so that's the reason why we moved with one contract in lieu of two. We would just reduce the risk. In times of uncertainty, reduce the risk. All right, so this is what I really wanted to talk about tonight. Was I wanted to show you this as this trade is running. I wanted to show you this. I saw this and I thought this was a good deal because we have a lot of people with a lot of in the community, and there is no right or wrong answer, but we have a lot of people with different risk rewards. All right, and so if you have a 1-to-1 risk reward, or if you have a 1-to-2 risk reward, or if you have a 1-to-3 risk reward, if you trade this 100 times, if you do a trade 100 times, all of them exactly the same, it shows you what your win rate has to be, right? And so at a 1-to-3 risk reward, if you're always putting up a 1-to-3 trade box, your win rate over 100 trades, in order for you to be profitable, you just have to you have to be accurate 26% of the time, which is crazy that you only have to be accurate 26% of the time. Mia says she took the trade. Tisha's in the trade. Dr. Denise has a limit order in a little lower on that September contract. So that's good. We'll watch that trade run for the night. We're not going to really pay attention to it. We'll see if we wake up in profit on it. And we got CPI tomorrow. See if it survives CPI. Could be good, but I think it's a very cheap opportunity for us. But risk reward 1-to-3, I only have to be right 26% of the time, which means that I can be right 2 to 3 times out of 10 to be profitable, which is a nice statistic that the odds become in your favor. You start to play the system that way. A 1-to-2, you just want to be right a third of the time. So 3 out of 10 times, really, you want to be right. 3 to 4 times out of 10, you want to be right. All right. If I have a 1-to-1, I need to be right. My win percentage needs to be around 51%. Right. And so with the 1-to-1, and this is the ratios that you should take a screenshot with or write down and see and say, evaluate the trades that you're doing, whether you're on a paper trading account or whether you're on a new a real challenge account, or if you're trading your own funds. You really want to look at this and evaluate over the next 10 trades, what is your win rate, right? And so if your win rate is in the lower percentage, if you're saying that, over 10 trades, I'm around that 30%, then you need to look at setups that are 1-to-3. If your win rate is in that 50 percentile or higher, then yeah, you can start to take a look at a scalping strategy or or a longer hold strategy that is a 1-to-1 risk reward. But if your win rate is like you're 20% and you wonder why you're losing money or you can't pass a challenge, it's probably because you need to start looking at your risk reward a little more closely. All right, and so you can be working against yourself if you have the wrong risk reward in your trading. So wanted to point that out. That's really what I wanted to talk about tonight. But we had some drama with the September contract. But no, that was good. It was a good night. Let me answer some questions here. Do you have to manually select the next September contract, or does it automatically move from June to September? Yeah, you have to manually do that. So you see how I did it in how I had to manually switch over the contract, just finding the September contract and pulling that open. So you have to manually do that. If you have Ninja Trader will give you an alert to switch over to the new contract. You just hit the alert button. It'll have an option for it to switch for you. It will do it for you. Once you hit the button, you have to manually hit the button, and it will give you that. But no, that's what we're looking for. Prices come down. We started to hit some consolidation here, and prices turning flat. We like when it turns flat, starts to move into the range. If this is, price has been pushing up for a while. So if this is manipulation, accumulation, then we need the distribution to occur. And so that's what we're playing into, is that distribution for the longer run. But also looking at this head here and this being right shoulder, that if we break this line here and come down, that we could come down a lot further. So that's the evaluation for tonight's segment. We're in the Nikkei buys tonight, and we're going to stick with it. I reduced the risk on this. 650, not a huge deal, but we're going to let this run potentially through CPI. Just let this trade run out. All right. That is evening markets. That's all we have to do. Easy work, easy profits. Not spending too much time here on this one, but that is tonight. We are at the 9 o'clock questions, or 9 o'clock hour. If there is no questions, we'll go ahead and end it. We want to thank Zeke for giving us these masterful beats that we can ride out to. And this has been Evening Markets with Tim. Any questions before we jump off? If not, I'll leave you with this. Trust God with all your heart. Lean not to your own understanding. In all of your ways, acknowledge him, and he will direct your path. This has been Evening Markets. I'm your coach, Tim, and we will be back on the charts in the morning. Everyone have a good night, and safe trading out there. Tomorrow's a big day. But we'll see you tomorrow in the morning. We'll be back on. Thanks, everybody, for joining. We're going to end it here. Been a great segment, and we'll let this trade run. All right. Talk to you later.